And welcome back to another exciting episode of The Road to Financial Independence. I'm your host, Mike Riskin, president of CPS Investment Advisors. And as always, I'm joined by my partner, co-host, CEO of CPS, Peter Galacco. Hey, Pete.
Hey, Mike, how you doing?
Doing terrific. How are you today?
I'm doing great.
All right. Well, today, Pete, we're going to be talking about something very important to a lot of our clients, certainly our community, something you and I are personally very passionate about at CPS Investment Advisors, and that's charitable giving.
Charitable giving, yes.
Charitable giving, something that it's so rewarding when you're, to be able to get back to the community.
Everybody needs money.
Everybody needs money. Yeah.
Everybody needs, especially not-for-profits and people helping out.
Yep. And as many of you may know, or for some of you that don't, CPS, we are located here in Lakeland, Florida. And man, are we blessed to live in a community that really, really, really emphasizes giving back and charitable giving, and being part of that is just awesome. Talk about, maybe before we get going, just talk a little bit about some of the things we've done at CPS and from a company standpoint to give back to the community and stuff we've done recently.
I totally agree with you. This community is incredible. And I think you need to go back to George Jenkins and Publix and how generous he was to the community and the people in need. And I think as time went on, we lost George, but time went on, there's other community leaders who stepped in who are using their success to help out the community. CPS has always been one that will give our treasures and our time to our community. It's a passion of mine. I believe that because we're successful, it has to do with our community, and it's our duty to make sure that our community is successful also.
That's right.
And those that are underprivileged, we think that our money's best spent helping them. A lot of times it may be a broad-based donation to the United Way that helps a lot of different organizations. We do a lot of specific funding for mental health, other charities, speech and hearing, stuff like that. Yeah. Where there's the biggest need, we want to be there to help out, to make people's lives better and actually make that positive impact on people's lives. No, I think that's what charity is.
Yeah, exactly. And we've certainly tried to make it a culture of giving in our office as well. Just like you mentioned, how Lakeland has a city that's a very giving culture, and we were blessed to have worked with Chaz Smith, our founder, who, when you talk about that next generation of givers that really showed the way, he was very instrumental in helping throughout Lakeland and Polk County.
He carried the torch when George is no longer there, along with most of his friends in town.
That's right.
And then just kept passing the torch on to the next generation. Right. It's pretty incredible. It's incredible what people can do when they put their minds and their resources together. I always look back to 2010 when we had the Affordable Care Act come out. And the Affordable Care Act was designed to help the working poor obtain insurance. Mm-hmm. Now, working poor means that you're below a certain poverty level. You have an income coming in, but to afford health insurance, it's going to cause you to have to make some really difficult decisions. Our community here set up Lakeland Volunteers in Medicine.
Right, that's one of the organizations.
Yeah. And it's an incredible organization where anybody who's working poor in our community can get free health care.
Yeah, it's really neat.
From dental to vision to surgeries.
Yep,
checkups. All they have to do is come in, apply, and get the services.
Right.
No cost. And it's our community that's funding that. It's our community that steps up to the plate and says, there's a need here. We can do better.
Right.
And we have.
No, it's awesome.
And that's what's so great about giving.
Yeah. And the CPS culture, I give you a ton of credit. Back, maybe it was during COVID or right after, we did also set up through your leadership, the CPS Cares program. And a lot of companies at the ownership level or the management level, you see people giving, but a lot of times it doesn't trickle down to the rest of the employees. And I think something that we've taken a lot of pride in at CPS is really building that culture with the employees also, and getting them engaged in doing so. If we have a day of giving, they're out there with us. We take them on tour. So maybe describe a little bit, and maybe hopefully influencing some of our business owner leaders out there, how we engage our employees to get more involved, even if it's not through money, but through their time as well.
Well, I think you have to show you have to show it from the top down. If the people at the top are giving and they're respectful of the community and they make sure that if there's a need that they're stepping up, then people see that in the organization. And if you allow the people in the organization maybe not just give their money but their time,
Right.
or maybe you can volunteer as a group, make it a day out for some of your admin staff, for some of your professional staff, or you're going to go and volunteer, put sod down, or put work at a school, do something that's needed in the community, and it builds a lot of camaraderie.
Yeah.
But it also gets you out there in the fresh air. It gets you doing something that puts a smile on your face. It breaks up the monotony.
Yeah.
And I pride ourselves that we have 100% participation in the United Way.
That's right.
As a firm. And one way I do that is I find it important that if our people are going to give their hard-earned dollars to a charity, I want them to see what their money is going towards. So once a year, we pack everybody up, and I think that's happening next Monday.
It is. Yeah, that's
We're
right.
packing
It's
everybody
usually
up.
around the Thanksgiving time.
Yep, packing everybody up on the bus, and we are going to 3 charities that the United Way supports,
Mhm.
so that they can see the impact of their dollars.
Right.
And that's exciting for them also.
It is.
Gives
Yeah,
them a little
our
time
folks
out.
love that.
Yeah, it gives them a little time out of the office, get lunch out of the office. Everybody gets to chat and enjoy each other on the trips and get to learn what the community is doing. And I think that's very important for business. If you want your people to give, allow them to give in a lot of different ways. Allow them to see where their giving is going and how it impacts the community.
Yeah, that's really cool. And like we said, it's so well received, and I think it's one of the certainly one of the big thanks that we get back from our employees. Like, wow, that was great. It's impactful, right?
Absolutely.
Most folks don't get to do
And
those
we
things.
also do a $5 Friday. You pay $5, you can wear jeans on Friday.
That's right.
And we donate that to a local charity that the entire staff picks.
That's right.
So at the end of the year, we get all our money together, bring the charity, and we provide them with a check, and that's a lot that
That is a lot of fun. I always enjoy. We present them with the big check, but tell them the real check's here.
Right, we can't
take
cash
to the
that
bank.
big check, right?
That's right. Well, great, Pete. So, in the spirit of this giving and charitable, a lot of questions that we get from clients or actually from nonprofits that work with us, because they're always, they're typically in need of donations, right? That's how they live by either grants or donations from the private sector, and working with us to how can we get our clients or the community to give to them. And so I think the focus of today's podcast will be really on some of the different ways people are able to give and some ideas that maybe some people didn't realize you could do these types of things.
Right.
And then at the end, if we have some time, we'll also discuss how you can even keep giving after you're dead,
Excellent.
which is pretty neat. So let's start with some, maybe 6 or 7 ways that you
Sure.
can give
So
to
first of
charity.
all, I want to go back to prior to the past 2 tax law changes. When we were able to itemize, it was very important for people to give to charity to make sure you go over that standard deduction, which was pretty low.
Right.
But what happened now was they raised that standard deduction where it's tougher to make it.
That's true.
Because your taxes and your mortgage interest really isn't adding up to that.
It has. I
much.
mean, I think it's you're in around $30,000 all in just to
Yeah.
even itemize. Yeah.
That's correct. So if you're not there, I always want to say, if you can get a benefit from a donation, it's gonna make you want to give that donation.
It helps. It
So
helps.
let's say you can itemize. So you want to give a donation. Most charities take credit cards.
Okay.
And I know in your wallet, you either got a cashback card in there or you got, a miles card or a hotel card that you can get some economic benefit.
That's right.
Use your credit card.
Okay.
All right. So you may not get a tax deduction, but you might get some mileage towards a flight, towards maybe a vacation, or maybe a little cash back. So, even though you might be able to not get a tax deduction, there's a benefit there. Now, if you're close on that itemized deduction, there's a lot of people who are close. One thing you can do is you can bunch your deductions.
Okay.
And this is a little complicated. You need to talk to your CPA
Yeah.
about it. But bunching your deductions means that if you don't give anything away this year, you're going to get the standard deduction. If you give something away this year, you're just going to get a little bit.
Right.
It's not going to make much of a
Yeah.
difference. So let's say we don't give anything away this year. we give it in January, and then in December of the same year, we do 2 in 1 year.
2 for 1, yeah.
2 for 1. So in every other year, you get a bigger tax deduction.
Okay.
You're getting the same one you get regardless, every other year, but 1 year, every other year, you're going to get something a little bit bigger.
No, that makes a lot of sense.
So if you're close, that's a tax strategy you can use to put a little bit more money in your pocket.
And to add to that, and I know this focus isn't on tax write-offs, but a lot of people do that with their property taxes as well. So I know you do get that 2% discount in Florida if you pay November versus January, but if you're able to itemize and you're paying 20% income tax, if you double up your income taxes in 1 year and your charitable donations, you should get well over the standard. And so definitely talk to your CPA, your tax preparer about that. But you can combine those strategies,
bunch both of those,
bunch of both of them up. Yeah,
that's a pretty good strategy.
Yeah, and do that. So a lot of people know that we're an RIA. We do financial planning and wealth management, and obviously deal with a lot of stocks. And this is one of the coolest. This is like a win-win-win-win-win. The next concept of giving and talk about stocks and how you can possibly put that in your charitable planning.
Right. So we've had a pretty good stock market. Probably, you go back to 2010. The market's been pretty good for everybody. We've had some ups and downs. We've had some rough times. But if you look at the growth over that period of time, and if you're investing your money, you've got some capital gains in your portfolio. So if you want to give the charity cash, a lot of times what you're going to do is sell some stock and give them the cash. Right. So you're going to pay capital gains and you're going to get a tax deduction on the other side. There's a better way to do it. Instead of selling that stock, give them the stock.
Well,
so you get a deduction, but you don't have to pay the capital gains. And the charity doesn't pay capital gains unless it's a foundation.
Right.
The foundation pays a little bit, but not much. But the charity usually doesn't pay capital gains, so it's a win-win for both of you.
Wow. Yeah, that's their home run, right? You're not having to pay tax on the growth of that stock, and you're getting the tax deduction on the value of the stock that you're giving.
Well, Mike, I'm not going to have as many shares. Well, you still have the cash. Go replace the shares with the cash you're going to use. It increases your tax basis.
Right.
Okay?
Right.
So that's a tax strategy that works every single time.
Yeah.
So appreciate stocks. Not only appreciate stocks, you might have some ETFs or some index funds or some mutual funds or some bonds. You can do it with any security.
Yeah. Most nonprofits will be able to accept any of those. And since we did say we're speaking to a lot of nonprofits out there, if you're a nonprofit listening, certainly setting up an account that will accept stock. You don't want to be in a position to say, "Oh, I can't do that."
Correct.
Because you're missing a huge opportunity there.
And we usually help the not-for-profits. We'll open up an account at no cost.
Right.
Be able to accept the security, sell them for them, and transfer the money to them. And that way they don't have to go through all the hoops that they would if they did it themselves.
Yeah, and to take the fear out of it from the charity side, once they receive the stock, it's pretty much in almost every nonprofit's policy statement that once you get the stock, you sell it right away. You don't have to worry about managing this portfolio in terms of donated stock.
Correct.
Right? Okay.
Correct.
So that's good. So the next technique out there that I think we should go over these donor advised funds. That's another neat tax strategy out there, and talk a little bit about that and when someone might look to utilize those.
So a donor advised fund is like your own little private foundation. Most of your brokerage houses, large brokerage houses, will have these. You can set up a donor advised fund. You can make a current contribution into it. So let's say that you want to make a big contribution. You got some taxes you have to pay. You want to get a little bit of a deduction. So you want to write a big check. Well, it goes in this donor advised fund, and you don't have to give it away all at once.
Okay.
It could stay in there. You can invest it. You can give it away to multiple charities. It's really gives you a lot of control over what you can do with your contribution. It's nice when you do want to give away a bunch of money, but you don't have to give it away all at one time.
Okay.
This is a great strategy to do that. So you have to give away, I think you have to give away $5,000 or 5%.
5%, right. 5%. Yeah, you do every year. I think there is a requirement. You can't just donate the money into this fund and invest it for 30 years and not touch it.
You're correct. They want to get some money out of it. Right. So it's a 5% a year or up to the maximum, up to how much you have in it. You can take it out every year and just keep funding it. It's completely up to you. It gives you a lot of options.
That's right. And a couple key concepts to the donor advised fund to remember. the contribution, like to a nonprofit, it's irrevocable. So
Yep.
once it's in there, even though you can invest the money, that's no longer your money.
Right. You can't take it
You
back.
can't take it back.
That's a big no-no.
It's a big no-no. Now so the donor can be the trustee, so to speak, of the account. So they're the responsible party. So even though you're donating it to your donor advised fund, you're still making really the only requirement typically is it has to go to a 501c3.
That's correct.
Yeah.
That's correct.
And make sure it does that. And then thinking through.
Yeah, you can't write it to Aunt Sally.
You can't,
because Aunt Sally needs a new roof. I mean,
That's
that
right.
might be a charity, but yeah, she's not a 501c3.
I do get that a lot. My daughter, she's a charity. Is she a charity? I'm like, no.
Some
not
act
so
like
much.
it, but
That's right. That's right.
usually.
But and looking at maybe some big opportunities there. Why would you do that instead of just donating, just hanging on to the money and donating it to the charity at that point? And some of the reasons I think about top of my head is maybe you have a big tax event in 1 year where you're going to give way more than you normally would. And then you want to spread it out over several years. So kind of talk
That's
about
correct.
that we've seen.
Right. So, because you're right. Most people do this with a big tax event.
Maybe like selling a business or
correct.
maybe they got a big bonus at work or something.
Correct. And instead of giving a charity or multiple charities a big sum of money all at once, where it's not going to be reoccurring, a lot of people like to spread that out so that the charity can budget their money coming in.
Right.
We like to think all charities out there, have great CPAs and budgeters and, but it's human beings. And when you get a big amount, maybe we need to spend more on this and this. And, it allows them to dish it out a little bit slower.
Okay. No, that's a fair point. And one other feature that's nice is even if you pass away, you can put like a beneficiary trustee. So if I were to pass away, my daughter can then take over. And so this fund keeps living on
That's correct.
potentially forever.
That's correct.
For the benefit of these charities. So it's a really neat thing. There. So let's move on to the next concept. What else out there?
So we got
at?
a great tax benefit, but you have to be retirement age, 70 for some people, 70 and a half, 72, now 73.
73. Yep.
So if you are required to take a distribution out of your retirement account,
Which is IRA or 401k.
IRA, 401k, not a Roth,
Not a
but
Roth.
an IRA or 401k, you can do what's called a qualified charitable distribution, which is really nice.
That's awesome.
You can give away up to, I believe it's $100,000
Per year.
per year to a charity, and you pay no tax on that distribution.
Right.
Now, there's going to be a lot of people retiring with substantial money in their 401ks.
Right.
And these required minimum distributions are going to be really big.
I mean, we've seen, well into six figures in
That's
some cases. Yeah.
And if you got income like that, your Medicare premiums go up. There's some bad things that happen when your
That's
income
right.
keeps climbing, with your taxes. So, one way to keep it down is let's give some money, and you're giving to charity. Let's give it through this form, and
Right.
that way we don't pay tax on it.
No, it's such a great technique.
Yeah.
Yeah. And we mentioned the whole standard deduction again, when that went into play, we did see a lot of older folks lose that tax benefit of the charitable deduction, and doing it this way actually comes right off the top of
Right
the
off the
return.
top. Yep.
So there's so many trickle down benefits to doing it out of your IRA directly.
Yep.
But it has to come right from the IRA.
Has to come out of the required
can't
minimum
come-
distribution.
Right.
I mean, you have to be taking the required minimum
Right.
distribution. It can't be you're 65 and you're drawing off your IRA. It doesn't work that way.
That's
you got to be taking that requirement.
So you really need to work with your advisor or whoever your broker is to do it properly. It can't come to you first, and then even it's got to go directly from your IRA to the charity.
Now, can you do a QCD into a donor advised fund?
I don't believe you can.
I don't think you can
No,
either.
cannot.
That would be too easy.
It would be
wouldn't
nice. Yeah. Yeah. So that also there's certain restrictions on where that donation can go, but unfortunately, it cannot go to a donor advised fund.
Right.
But there's some interesting strategies around that too. So
Yes,
if somebody was interested in doing that, we've worked with some people on that.
Yep.
So
Yep. There are.
All right. So moving along, What about stuff? Can you donate stuff?
You definitely can
I
donate
know.
stuff.
I used to be the tax director at CPS, and every year, almost everyone on a client would hand me these goodwill receipts. So let's talk about those.
Hang on to those goodwill receipts.
And the Salvation Army and all those good folks.
Well, first of all, if you have stuff in your house that is not being used, you don't want it anymore, and you don't want to go through a yard sale, donate it. Donate to charity. There's a lot of really good charities out there. Salvation Army, they're a really good charity. You got some local charities. I know Peace River Center has a charity that you can donate clothing and stuff, and they give it away to their clients. So donating your goods is a great idea. If you have a business, donating some of your older equipment that you don't need anymore, or your tables, your chairs that maybe
computers are a great one. We've done that where for us, maybe a computer's outdated, it's slow, it doesn't meet our needs, but for some nonprofits, they just need a computer to get online, and it's more than adequate.
That's correct.
And so those work real well.
Yep, and you have some value sitting around you.
Right.
So in addition, people always need volunteers.
Oh yeah.
You don't get a tax deduction for it. You don't get paid for it, but it does give you a little bit of a good feeling that you've helped people out by getting up and rolling up your sleeves and helping.
Yeah. And I don't know of a nonprofit out there that would turn down some volunteer hours.
No,
they all need the help there.
That's correct. That's correct.
Yep, absolutely. Now, what about the, this is always a tricky part because like I mentioned, I always got those goodwill receipts. And so the value of these goods, should people stress over the value of the old shoes or the slightly used shirt, or just work with your CPA on that?
Work with your CPA. Yeah. But a rule of thumb is if you spent $100 on this, you get about a 25% discount, 25% deduction.
Wear and tear on it.
Yeah, it'd be $25. Okay. So if you add up everything that you purchased and it's on your honor,
right,
which is pretty scary, but it's on your honor, multiply all of that by 25%, and that should be about what you get.
Right. And like everything else, just don't be greedy and egregious.
Yeah, that's right.
That'll raise a flag.
That's correct.
Nice. And a lot of certainly we see this more in maybe larger corporations, but in terms of matching gifts, well, I should take a step back because we do this too.
We do this also.
And so a lot of corporations will do matching gifts. Explain that a little bit, and maybe what employees should look for and talk to their HR department about.
Correct. You probably see in your employee manual, but if your employer matches gifts, what'll happen is if you give away $1, they're going to match a certain percentage of it, up to a certain percent.
Right.
Okay. So that's a way that you can get your contribution can be bigger than it would if you.
Right.
So, if they match 50 cents on $1 up to $1,000, that's $1,500 you can give away, and you only have to give away $1,000, which is pretty nice.
That's powerful. Yeah.
It really is. Yeah. It really is. It also makes you look good at the corporation.
That's right.
Because if they're matching, then philanthropy is very important to them.
Right. Right. I know, it's something that it reflects on your character, I think, and it doesn't go unnoticed.
Yep.
And I know you mentioned our Jeans Day here at CPS, and that's one of our more famous matches, so to speak, where at the end of the year we'll match that for the charity of the year. So
yeah, absolutely.
That's a pretty neat program. So just to tie things up a bit here at the end, I would say the vast majority of charities are legit. They do tremendous work. Every now and then, unfortunately, we see some, and they're always going to make the newspaper, so they seem like they're more common than not. But what should people look out for and be careful of in donating to charities in terms of fraud? How can you investigate? And obviously, the big ones you know of, but there's certainly many local charities that are amazing. Like Lakeland's a great example. We have so many local charities that are amazing, but the average person may not really know a lot about them. Right. And unfortunately, there are some fraudulent ones out there. So kind of help our folks what they should ask and what they should look for maybe.
Well, the first thing you should do is Google them. See what kind of website they have. That's not going to tell you if they're fraudulent or not, but it's at least going to tell you that they're out there somewhere.
Right. They actually
at least they exist.
Possibly,
correct. Yeah. Correct. But there are sites out there that you can go to, like Charity Navigator, GuideStar, GiveWell, that you can put the charity in and see if they're actually a legitimate 501c3.
Okay.
That's important. If you're going to give your money away and try to get a tax deduction for it, or a qualified charitable donation for it, you got to make sure it's a 501c3.
Yeah.
And if it's not, then you're not going to get that benefit.
Okay. Yeah. And another concern that we see in the media a lot is, so maybe it is legit, but if I donate to an organization for a certain cause, but only 40% of my money is going to that cause, the other 60% of my dollar is going to pay for the staff
That
in
would
the
be
office.
generous, I think. I mean, that'd be a good charity, because there's a lot of charities that most of their money goes towards, you know, admin, office expense, overhead, salaries. These are some of the sites you can go to see what percentage of your dollars actually
There you
going
go.
to
Right.
the need. And that's
Or
important.
hitting the recipient.
Absolutely, where the need is. So how much money is going there compared to what they're raising?
Right.
And I look at that a lot.
Yeah, and you can get that. And most, all 501c3 tax returns are
Yep.
public record. That you, and I think some of those sites you mentioned, you can access them that way.
Absolutely.
And so those are some things someone might want to look for.
So there's a couple different thoughts on giving intestate, giving
After you pass away, yeah.
correct, through a will, through a foundation, through a 501c3. Some people are on the side of, hey, I'm gone, let my next generation give to the charities that they want. And there's others that think, hey, this is a charity that's done a lot for me throughout my life. I want to continue even after I'm gone to give to it. So there's a couple different ways to do that. First of all, you can set that up prior to passing. You can do some trust like a
Just charitable remainder trust.
charitable remainder
Right.
trust,
Yep.
Kratz and Kratz,
Yep.
where you put the money in there, you can live off the income, and that goes to the charity.
That's right.
You can set up your own 501c3. However, if you keep putting the money in, it's going to become a foundation, which isn't a big deal.
Right.
Not a big deal, but you can set up your own foundation, or you can set up the charitable account at the brokerage house, the DAF, the donor advised fund,
Mhm.
while you're alive. You can do it through your will,
Right.
and you can do it through a trust.
Okay.
Okay. However, if you are considering giving money when you pass, I recommend that you look at your tax deferred money first.
Okay.
Okay. If you got $3 million in your 401k and you want to give $1 million, let's give $1 million out of your 401k, because that's taxable
that's gonna
money
be
to your
taxable,
heirs,
right.
Let's keep the $1 million that we've already paid tax on and not give that to
That's
charity.
right. That's a good point.
So, one of the ways to do that, you can make the charity, if you want to give one third beneficiary.
So it can actually be a named beneficiary
That's correct.
on your IRA. Okay.
That's
Or your
correct.
401k.
But the best way to do it is to have a revocable trust.
Okay.
Then you have the trustee who's going to actually execute the checks out.
Okay.
So there's no confusion. There's no brokerage houses that are involved. The attorneys aren't involved. The trustee can actually execute that for you.
Okay.
So I highly recommend, if you're looking for that, look at your retirement income.
If it's important to you and you want to make sure it happens, you need to have it in your estate plan. You
That's
need to put it in
correct.
your will. You need to put it in the trust. You need to put a beneficiary, because if you just tell, no, don't worry, my kids know that I want them to donate 10,000 to my alma mater, but once you're gone and they
There's
inherit that money,
It's like, they never told me that.
So yeah, we've seen that too. But you want to make sure that your wishes are met. Yeah, put that down in your estate plan.
Yeah, absolutely.
Awesome. And if you like this content, please don't forget to subscribe to us on our YouTube channel. And as always, you can reach us at www.cpsinvest.com, or feel free to give us a call at the number on your screen. We'd absolutely love to hear from you.